Good morning, traders. It is 8:02 a.m. Chicago time on November 11th, 2022. This is episode number 2356. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to start off today by just sending a message of gratitude to the veterans of the U.S. Armed Forces. Again, it's Veterans Day today. Happy Veterans Day. I want to thank those who are serving and have served for your service. They're doing something that I know I'm too much of a chicken to do, probably. And I appreciate that they're putting themselves and their family in harm's way to do so. So thank you to all veterans. First, I want to take a look here at our convergence trading pre-market summary sheet this morning. The market posture is really mixed. We are pushing slightly higher today, and are balancing across the board. It looks like, and so this morning we do have we're slightly gapping up. The scale on the risk posture was adjusted a little bit yesterday, given the strength of the move pre-market. But there's a trifecta of good news that I'd like to kind of discuss for a little bit to set the context or the overall fundamental posture of the market. The trifecta is that CPI came in quite weak relative to expectations yesterday. Everybody knew that. Had a 102-point spike up immediately in the ES. Just an outstanding move. Very, very unusual. But also the employment data that has trickled out is also promising in terms of the Fed slowing down. So the Fed fund rate projection for rate adjustments has gone from 75 basis points to 50 basis points. We covered that yesterday. The second piece is, out of nowhere, China comes out with rules for COVID zero tolerance policy that are much more lenient and relaxed. This will help relieve some of the pressure, the supply chain pressure that many companies, including Apple, have been complaining about or have been bringing up as a result of as a potential barrier to them meeting their projections or guidance. And they came out of nowhere. If you recall, I talked about this on Monday. There were rumors over the weekend, or last week actually, that China is likely to adjust its zero tolerance rules. And then they came out on Saturday in a press conference, the Chinese government, the Ministry of Health, and said, we don't know where this is coming from. This is inaccurate. Our zero tolerance policy will continue to stand. And here they are in classic China fashion, changing the rules to meet what the rumor was. And so that's another piece. The third piece in this trifecta is that Kherson is now in Ukrainian control. Ukraine is making really good headway into the eastern front against Russia. Russia is conceding the pullback away from Kherson, and they are urging the Ukrainian government to take this as an opportunity to negotiate some sort of peace treaty. So these are very, very positive pieces of news, and the market just digested a lot of that yesterday. And still overnight with this new China news, we still had one of the most bizarre weeks in crypto this week, with FTX going from a valuation, I think October a year ago, of $25 billion to now having to declare bankruptcy, all in a matter of about 24 hours. Just an incredible move there, and a very, very bright shining light on the lack of regulation and the need for regulation into cryptos. It looks like the the um, the company used customer tokens to securitize loans. And so customers don't know if they'll get their tokens back. Really bad news all around for the crypto market. And so Bitcoin has pushed well below the 17,500 low that we've had recently, and now trading at 16,400 as you see on the screen. Just really bad. Um, so, what are we expecting for today? I mean, overall today, not much here to talk about. Friday, we had GDP out of Great Britain showing a bigger slowdown than expected, negative 0.6% versus negative 0.5. The growth rate Q on Q is negative 0.2, was expected at negative 0.5. Other than that, there were a bunch more numbers out of Great Britain, but the key number today, and it should have been highlighted on this sheet here or bolded on the sheet here, is Michigan sentiment, consumer sentiment prelim. This is the one that moves us. Expecting 59.5. This is likely to move us as it always has. So turning our attention to the S&P. The S&P has traded 329,000 contracts so far, and the inventory is 93% short. In other words, 93% of the volume traded occurred above the prior close or settlement, and the range is 40.25 points. This is likely to be a digestion day for the move up. We have pushed through some key areas, and we almost got to 4,000 So it makes sense that we're up here versus in prior announcements where anything above 3,900 is unsustainable. Given the path that the Fed is choosing, it'll be very difficult to get the earnings needed to support the underlying stocks in the S&P 500 with the pace that the Fed is going and the terminal rate that was expected. Now the market is pricing in a lower terminal rate and a slowdown in the increases, and so here we are up at 4,000, where we've struggled to hold 3,900. So a very dramatic change in the way things are. Let's take a look at where we are in the big picture. This is the chart that actually shows us what has happened. Look at what we had. I compressed this into one composite profile, but yesterday we had a very clean push down. Let me change the color of the pen here. A very clean push down, and then a push up. Yesterday, once we cleared, we basically tested the value high of this area, and to me, once it cleared this balance, the next key price was right up here, and that price was 39.49.50. You notice the market is moving from 37.50 to 38.47 to 39.50. It's this 50 figure has been in play for quite some time as a balance point. A lot of support, a lot of icebergs yesterday. Just a classic trend day. Up, pretty strong close, very bullish close, and settled above that key balance point. So if I scroll back a little bit, you'll see that this becomes the most prominent place to test, and that was the key target for any longs yesterday. I talked about this in the conversion trading chat room and the Mavens channel, and I discussed the fact that anything that gets us into 50 is considered just the absolute peak of a long trade. If it keeps going, great, but the expectation is it would not. Now we are still trapped inside of this balance zone right here, and I'm anticipating that we have some room to the upside all the way up here into the 40 30, 40 35, something like that. But we're very likely to build a fat profile today up here and reconfirming or reasserting our acceptance of this 39.50 and above. That's what's expected for today on on the S&P. So looking at this on a volume profile basis, what is going on? Where are my volume profiles? I had to restart my platform this morning. Let's load the profiles. Let's talk a little bit about yesterday. Yesterday, multi-distribution profile, a good movement in value to the upside. We did take out the key over, the key over under was much lower. We took out the key resistance yesterday in the S&P. The levels you see are for today. And so now this 3,900 becomes a key test area. We did see some really, really interesting order flow type moves yesterday. That there was a fair amount of selling coming into yesterday, but the buying was much stronger and ended up taking us up. Really strong rally into the close. Big trades, a lot of big trades into the close here. Some long liquidation. You look at it right there. Let me zoom that in a little bit or enlarge that. Look at that. We've been running all day. This is a full session. This is the full session delta. Boop, 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 boop. Peaks out in the morning. This often happens. And then we make a higher high, a weaker delta. And then we rally into the close with a lower high in the delta. And look at what happens on the close. Just very nervous longs, just hedging or liquidating the positions. And what does it do? It pushes the delta all the way down to basically break even on the day, on a big rally day. This is very interesting because it tells us that the long side is still nervous. Despite the buying yesterday, the long side is still nervous coming into the session. And then when we look at today's, I'm missing data. Man, it's problematic, this data issue on Rhythmic. It's unfortunate. So today, though, the delta is pretty much sideways. I mean, I'm looking at it on IQ feed here. The full session delta is at 23.44, yet prices have kind of shifted higher. Point of control has moved higher as well to the mid 80s. And overall, I'm expecting this to be a pretty choppy sideways day. I'm not going to be a fool and put up some lines today. We have run a long way, and really the key area I expect to get tested at some point is right back to this MC point of control right here at 39.48, and below there I'm expecting a key test into this 30.35, 39.35. So 35 and 49 are really expected to be tested. If they don't do it today, they'll do it some other day, but I'm expecting us back here at some point. What we did yesterday is we moved into the next balance area, which is very big. I showed you that on a TPO chart. We pegged the point of control, and then we pushed through at the end of the day. Through that point of control, we pushed through, and we are not likely to escape its gravitational pull right away. I expect us to kind of boomerang around and pull back to the 49s. It's most likely going to do that today. So we're expected to open in the gap. We're just above the prior high a day at 39.65.50, but I'm expecting us to close this gap very quickly and to be responsive on the open this morning. I'm expecting us to fall as soon as we open. This has gone a long way yesterday, If you look at the settlement of Wednesday and the settlement of yesterday, this is a 3 sigma move. This is a very, very unusual and wide move, and it's unsustainable statistically speaking. So I'm expecting these guys to take profits as you saw on the close yesterday. I'm expecting that to continue into the weekend. I'm going to leave you with that and keep it short and sweet. We do this on Fridays, every other Friday. We do this thing, where are you from? But I want to keep this short, and it's been a long and very tiring week. Those of you who voted on the event contracts yesterday, by the way, EdgeClear will put out the results, but no trades were taken because it did not meet our plan. We would have been paying out the nose to be long these calls that everybody was voting for. And we're here to make money for charity, and we're not going to do that by buying these event contracts for $15, $16 when the maximum return is 20. So what I did is I went and put in bids in case there was a pullback. I put in bids at anywhere between $2 and $4, depending on the levels I was looking at. And those never got tagged because the market didn't pull back much on the open yesterday. So no trades, 0 hits, 0 misses yesterday. You'll see something on that. I do appreciate you participating and look forward to your vote for next Tuesday. I'll leave you with that. Have a great weekend. It is Friday after a big day up, big week up. So be careful today. Don't commit too much to any single trade. Good luck, and I'll catch you on Monday. Don't forget to hit the like button. Don't forget to subscribe to the channel if you're not a subscriber already. I really appreciate you doing that. Take care.